This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil. So for those of you who don't know, I've been providing stock research and consulting to institutional money managers for over 30 years. What I like to do for Friday morning, I'm doing this as of Thursday's close for Friday morning. I go through the S&P and I look at the market conditions, and I go through the S&P in multiple time frames. I look at MACD, I look at ADX, I look at the moving averages, the trend. So we're trying to identify key levels, what type of trend and momentum is in place, and go from there. So let's go ahead and get into that. But first, before we do that, I do want to make mention of my book, and a lot of people have told me, the guys that have gotten my course and feel like they've gotten a lot out of it, as well as the people who are subscribers to my research, started with the book. So I wanted to make that a little bit easier to access. So I have a PDF version now for $5.99. You can obviously still buy the book on Amazon if you want the hardcover of the paperback version, but PDF is available now here through rabilstockresearch.com/book. All right, let's get into this analysis now. Okay, so we move into the market conditions now, and I've got those listed on the left in my Excel spreadsheet, actually. I want to point out that we want to kind of look at this and sort of divide this here. And below the line, I would consider to be secondary indicators, and above the line are our primary indicators for market conditions. All right, so the trend and the momentum are keys, decision makers, right? We're going to use these to really make our decisions. The ones below this line, the volatility, the overbought, oversold, and the sentiment, again, what they're going to do is give us a sense of what kind of condition is out there, but they're not timing tools. All right, they're not used that way. I use them as a backdrop for me to give me an idea of how strong. If we have a positive side up here, how strong can the move be? And where we should start to get worried is when we might have all these positive on this up here, but we either have, maybe signs of the daily volatility increasing, and maybe the weekly is neutral, and both of these negative, meaning we're overbought and very bullish. So if we start to see that as a backdrop, then we can start to think, okay, it's getting a little dangerous up here. Even though the trend is positive, we might want to be looking for some kind of a deeper pullback. So that's kind of how I use this. So I want to start with the sentiment, and it has dropped, and I actually moved it from negative last week back to neutral because the bulls dropped, and the difference between the two, the difference between the bulls minus the bears, is 33%. And if we look at what the market's done, it's these little pullbacks like this these end up dropping. The bulls drop, and the difference between the two drops anytime we get any kind of a little dip. And so it's cooling it off. It's cooling off the bullishness enough to allow it to continue to climb. So what we're looking for, and I think it's going to happen this next Wednesday when I get updates on this on Wednesday, is, I think the strength that we've got here, if it stays in place between, say now and early next week, it's very likely a lot of the bears are going to throw in the towel. A lot of the people that have been in the correction camp are going to throw in the towel, probably right at the wrong time. But we're just going to see. I have a feeling these numbers are going to grow. So we'll just be on the lookout for that. We don't have to guess. We'll wait and see how it plays out, and we'll see what it looks like next week. Now, the overbought, oversold oscillator is based on the RSI 5 on the weekly here. And you can see it's really been in overbought territory now for quite some time. It made a move up, and really over the last 4 or 5 weeks, it just kind of hangs up in here. It's actually been more like 6 weeks. And it's pulled back a few times, tried to dip down below. It even had a little sign of kind of little mini divergence, but the reality is this is very, very strong. And so it's not a timing tool, and the thing is that even when these two are negative, I'm going to show you what we were looking for to see if we were going to get a pullback, which it never took place. So again, we're going to always use these to determine whether we do anything. These are just telling us whether we should start to think that way. Now, one thing that I would tell you, and the reason why I really haven't been looking for any kind of a big drop in the market, when we were looking for a pullback, when these were negative, I was thinking more of a pullback, like just a pullback that's an opportunity to buy. And why is that? Well, the fact is that we just don't have any real volatility in the market. This is the average true range of the S&P on a daily chart. So it's a 20-period average true range, this red line. And then I've overlaid the 18 MA on there. Whenever it's below a declining 18, which it has been for quite some time, it's actually a pretty low risk or lower risk environment. When this climbs above and this turns around, then the risk starts to increase somewhat. And so if you see this on a daily chart and then look at what this has done on the weekly for pretty much this entire year, it has been a very strong environment on the weekly based on volatility. Low volatility environment is typically bullish. All right. So we're in that position right now. We're not quite. I think this number probably going to need to get over 40 before we have a big issue, but that could happen next week. I mean, we could get a pretty good jump just based on how strong this move has been. So we'll have to see if there's any big changes over the course of next week. All right, let's get into the time frames. And what we're doing here on the monthly chart is we are clearly above, for the fourth month in a row, we're above the 18-month line. But this 18-month line has not turned up yet. And now, I mean, by the time this turns up, we're going to be pretty overbought if it keeps moving like it's moving. So I'm assuming while this is cupping around, we're going to start to see some kind of a pause or pullback in this environment. The good news is the MACD did cross over its signal line, and that improves the bias on this time frame. It's still neutral because we don't have, green just isn't strong enough in my view to call this a bullish momentum characteristic, but it's definitely better than it was. It's certainly better than it was here when it was way overbought and starting to work down. So it's sort of encouraging signs on the longer term time frame, but it is getting ahead of itself, and we can really see that on the weekly. The number I'm thinking of up here is really up towards 460, maybe 461, something like that. We're getting up towards this upper channel, and we're getting up into this resistance area that I highlighted. I've had up here for quite a while, maybe 3-4 weeks. Now, the good news about this move, and really, we didn't really have this up until we got up into June, where we started to really move, is the ADX has really kicked into gear. We've had MACD confirmation the whole way, but we're finally getting some real strength on an ADX basis. And you can also see the volume pattern is really not bad. It's not climatic, but it's bullish. All right, there's stronger green bars than there are red bars. That's a really good sign. Now, actually, I'd get worried if we got a big green bar. Like if we had a huge volume, then I'd start to think maybe climax. So it might happen, and then what we could do is kind of push through 460 and then come back down. And that would be, even though it's getting through resistance, it's really more of a climax pattern. Something we want to be on the lookout for. Because right now, we don't really have any signs of momentum divergence at all. All right, so and let's go to the daily chart because that's the one that's going to be a little bit more sensitive. And if you know, last week, if you're watching, you make a higher high here, a minor higher high, and the MACD made a lower high, okay? And the green DI made a lower high. So what I was saying is if we can break the, and I'll show this on both time frames at the same time. The reason why I really felt strongly that we needed to break the 18-day was because we had done the one here, and that's the one coming down. 2 was the test up here, so that's the 2. And then the 3 would have been, and I call it a 1, 2, 3 change in trend. Again, that's right out of my book. If you get a break here, that's a 1, 2, 3 to the downside, and that would coincide. That would have coincided with a break of the 18-day. So we didn't have either one of those occur. And in fact, what I call this is when we go and do a 1, a 2, and then come back down and turn back up and come back up through this is a failed It's essentially a failed 1, 2, 3 or a failure pattern. All right. And when we have a failure pattern, that's usually bullish back to the upside. The fact that this held here. One other point I wanted to make, because I did get this question, is okay, so if you have divergence here with MACD, makes a lower high, and then you come down, but you make a higher low in price right at the moving average. I think it's a lot stronger signal when it's either at this moving average or this moving average. In this case, in order to make a higher low, you had to be above the 18. But if you notice, the MACD actually made a lower low. We can really see it if I zoom in. You see how that made a lower low? So we get a lower low here and a higher low here. So it's the reverse of our standard divergence. It's a reverse divergence, but still a very powerful tool. And you'd want to go and look for opportunities on the smaller time frame. Because there have been gaps, there really hasn't been any great opportunities to get long, at least from a trigger standpoint. Although you could have looked at this trend line break as a potential entry point. So anyway, we've got a pretty strong market environment right now, and a lot of interesting patterns and a lot of breakout patterns taking place. And we're seeing a little bit more broadening out. A little bit more small cap action, stocks under 10 billion participating a lot more. And I think that's a really good sign. So that's the update for the week. Go ahead and let me know if you have any questions or comments. Thanks.